If you own an LLC, there is a good chance you're going to start seeing emails, letters, or websites telling you that you need to file a federal ownership report, and some of them may even ask you to pay for it. Now, do not automatically pay them because the rule for US LLCs just changed. But here's the part that could get you in some trouble. Some LLC filings are now gone, and others absolutely are not. So if a notice lands in your mailbox saying final notice, annual report due, or federal compliance required, you need to know which one is real before you either pay it or throw it away, because one of them could be completely unnecessary and ignoring another one could still cost your business. But let me take a step back. Here's the situation. Over the last few years, a lot of businesses were told they may have to give the federal government information about who owns or controls their company. Names, addresses, identification information, ownership details. The official name is Beneficial Ownership Information, or BOI. Now, if you've never heard that phrase before, that's fine. The only thing I care about right now is this. If my company was created in the United States, the current federal rule says my company is exempt from filing that ownership report. FinCEN, the Treasury Bureau responsible for this system, issued the final rule August 11th. US companies are now exempt from BOI reporting. That sounds like good news, and it is, except this is where you could make a different mistake. Say this lands in my mailbox next week. My first thought might be, wait, I just heard LLCs don't have to file that government report anymore, so I throw it away. That could be a problem because the rule that changed is about one federal ownership report. It did not erase my state annual report. It didn't erase my taxes. It didn't erase my business license. Depending on where my company operates, I may still have annual filings, state fees, franchise taxes, license, permits, or other requirements. So now I have two pieces of paper that both look like LLC compliance. And that distinction matters because one may no longer apply to me while ignoring the other could actually hurt my company. If you've ever had three official looking envelopes sitting on your desk and thought, I have no idea which of these is actually important, this rule change makes that problem even more confusing because some of those letters aren't just outdated, some are just scams. Now, this is the kind of thing I would be extremely careful with. Big government looking seal, a deadline, a QR code, something saying mandatory ownership filing, and then $199 due immediately. When I'm running a business, that's an easy payment to make just to get the problem off my desk. $200 versus potentially getting in trouble with the government. I understand why somebody just pays it just to get rid of the headache. But the federal agency behind this system has specifically warned about fake notices. They've identified fraudulent forms called Form 4022 and Form 5102. Fake government-sounding organizations and notices requesting money for BOI filing. FinCEN says there is no fee to file BOI directly with it, and it does not send correspondence requesting payment to file BOI. Now combine that with what just changed. If my LLC was created in the United States and somebody is demanding money because they claim I urgently need this federal ownership report filed, I am not sending money because the envelope says final notice. I'm verifying it first. But here's where it can get tricky because a letter doesn't necessarily have to be an outright scam for me to spend money I didn't need to spend. Say I get another envelope. It has my LLC's actual name, my correct address, maybe even the date I formed the company, and it offers to handle a compliance fee for $149. That fee can feel completely different from some obvious phishing email. My information is right, the company sending it may actually exist. The service they're offering may actually exist, but I still need to separate two completely different questions. Is this company legitimately offering me a service from am I legally required to buy that service? Those are not the same thing. That's the trap I care about. Because when something knows my LLC name and formation date, my brain immediately upgrades it from junk mail to government problem. And if you've ever formed an LLC and suddenly started getting mail that somehow already knew your business existed, you know how convincing that can feel. So before I pay or before you pay, we need to identify the actual filing underneath the offer. Is this the federal ownership report, a state annual report, a registered agent service, some optional third party service? Because the logo and the urgency are not what determine whether I owe the money. The underlining requirement does. And unfortunately, figuring that out online just got harder. Because if I Google this right now, I can still find information telling me I need to file. So who's wrong? This is where the timeline really matters. The exemption didn't actually begin this August. Back in March of 2025, the government issued an interim rule that already removed US created companies from this reporting requirement. Now, this is where the timeline really matters. The exemption didn't actually begin this August. Back in March of 2025, the government issued an interim rule that already removed US created companies from this reporting requirement. What happened this month is that the government made the framework final. So if you remember hearing last year, US companies don't have to file BOI anymore. You weren't imagining it. The practical exemption was already there. This August made the exemption permanent under the new rule, under the final rule. And now we have an information problem. An article written in 2024 could have been perfectly accurate when somebody published it and completely wrong for my LLC today. An old YouTube video could tell me there is a deadline. An old accounting page could tell me to update my information. And FinCEN's current FIQ actually warns that some older information on its own website may be outdated and tells users to disregard guidance saying US companies still have to report BOI. So if two Google results are telling me opposite things, I'm checking when was this written and who is actually telling me this. But this leads me to the question I think matters most for anyone who already dealt with this. What if I already sent the government all of this information? Because maybe I didn't ignore it. Maybe I did exactly what I was told. I submitted my name, my address, ownership information, identification details, and now the government says my US company doesn't have to report anymore. My first question is, okay, but you already have my information. What happens to it? And this is one of the bigger changes in the final rule. FinCEN says it will delete previously reported information from US persons who are now exempt from the reporting requirements. Now, FinCEN says it will delete previous reported information from US persons who are now exempt from the reporting requirements. So this isn't just don't file another form. The agency is also saying it will delete previously reported information from now exempt US persons. And if I previously created an individual FinCEN ID for the system, US persons no longer have to update or correct the information they previously submitted for that ID either. If you were already mentally thinking, great, am I supposed to keep updating this thing every time something changes? That burden is different now too. But there is one situation where I would not assume everything I just said applies. And it comes down to one detail about the company. Where was it actually created? Not where do I live, not where are my customers, not even where do I operate, where was the company itself formed? Say I created my LLC in Florida, US created company, exempt. Texas, same. Delaware, same. And the exemption actually applies more broadly to US created companies, not only LLCs. FinCEN says all entities created in the United States are exempt from BOI reporting under the current rule. But now change one detail. Suppose the company was originally formed under Canadian law, then later registered to do business in New York, for example. That company was created outside the United States. Now, the answer can change. Certain companies formed under the law of a foreign country and registered to do business here can still fall under the current reporting rules. But there is a terminology trap here that I think is worth knowing. Say I formed my LLC in Delaware, but then I registered that same LLC to do business in Florida. Florida may refer to that company as a foreign LLC because it was formed in another state. And if I see the word foreign, I could suddenly think, wait, does that mean this federal exemption doesn't apply to me? That's not the distinction FinCEN is making here. For this federal ownership rule, the remaining foreign company category refers to an entity formed under the law of a foreign country, not simply another US state. So the change is real. The problem is assuming it applies to every piece of LLC mail sitting on my desk. That's the distinction that actually protects the business. Anyways, guys, that will do it for this video. I hope you guys enjoyed. Please remember to leave a like, subscribe to the channel if you haven't subscribed already, and YouTube thinks you'll enjoy this video next.